The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Good morning, folks. Welcome to the, so this is Steve Rhodes filling in for Larry Pesavento. Of course, if you're listening in at 1 o'clock, you do have the Trader's Edge show. Just happened to be recording it this morning. Here at 9 o'clock, we're going to go ahead and make sure that the show is pertinent to you, all the information that we provide. So let's begin. And hey, I would love to hear from you. So you can give us a call at 877-927-6648. Obviously, it's 1 o'clock in the afternoon. Don't do that because I'll be doing something else. But you can give us a call this morning if you are listening in. If you can't call in, you can always send me an email, steve@tfnn.com. Inside that subject heading, if you would be kind enough to put radio show question, and then in our Tiger's Den or our YouTube channel, well, any ping will do. So let's go ahead and get this show started on a terrific Thursday, Thirsty Thursday, as Stevie likes to refer to it. Today is June the 18th, and of course, this is Tiger Financial News Network. Currently, we've got all of the equity future contracts trading to the downside. So you've got the Dow down 264 points. That's about 1%. Let me turn the charts on here so you can see what it is that we're looking at. That will be helpful. A little thumbs up in the den if you can hear my voice out there. We were having a few troubles earlier this morning, so I just want to make sure that you guys, gals, can hear me. If not, we'll come up with game plan B. Sounds good. Okay, perfect. So you got the Dow down 270 points. The Nasdaq's off 31. The S&P's down 25. Russell is off 17. We're going to go figure out what that all means. If we take a look at so Larry, I'm going to do I used to do this 9 o'clock show. I love doing the 9 to 10 o'clock show because the live action with the equity futures, what do they mean with price moving lower? Is it busted through support? Where's it headed to next out there? But to begin the day, when I sit down in front of my system to get a feel for what's been transpiring while I've been sleeping, really similar to Larry. And I know one of the things that Larry likes to take a look at is what's going on with the DAX. And why does he do that? Here is a chart. This is the perfect example of why he does it, why you should do it out here. This chart, it's just a 5-minute time frame chart. So I'm not worried. Let's not worry about the patterns that are in the 5-minute time frame chart. It's just to point out to you how tied together all of the markets are worldwide. So here's a 5-minute chart for the DAX. That is in the upper portion. And in the bottom portion, it's the 5-minute chart for the NQ out here. And you can see that directionally speaking, that this world is tied together, even on a 5-minute time frame. So that's important to lay that out. And I'm sure Larry has shared that with you before, but I don't know whether he has or he hasn't. I just simply wanted to put that out there. So because we are so connected, here's another example of how connected the markets are. Here are 4 primary markets. You've got the Dow, the Shanghai, the Nikkei, and the DAX. So I've just expanded what it was that we were looking at on a 5-minute time frame. Don't worry about which color is which indice on this chart out here. The point is that markets move, typically, directionally speaking, in the same direction. And that's why it's important to understand what was transpiring in the overseas markets to give us a feel for what is taking place today. So as an example, so you got a feel for step number 1 that I take a look at. Well, we're sort of getting a feel for it. And so let's take a look at these worldwide indices. So what transpired last night in the Nikkei? Are there any clues here? Well, if we take a look at the Nikkei, this has has an A to B equals CD, so it's got a Gartley sell pattern. I don't have it drawn in on my chart out here. Price has moved lower, and price is trading below Stevie's green line, 22,714. As long as the Nikkei remains below that level, then its price target is 2334 to the downside and 22,714 to the upside. But the point here, when we take a look at the Nikkei, is there's nothing to change its bearish pattern that is out there. Its sell pattern, so to speak. Bearish, we use the word bearish or bullish. It's really directionally speaking out here. If we take a look at the Hang Seng, we know the Hang Seng has a TD9 count top. It's got a 7th wave move, the letter G on my screen top. However, in this case here, unlike The Nikkei, the Hang Seng is actually slightly more bullish. Now, it's between bullish and bearish, so we'd have to call it neutral. Bearish because of the topping patterns out here. Bullish because price is trading above Stevie's green line. That was tested and rejected earlier this morning out here. So price, in the case of the Hang Seng, says that it wants to continue to move a bit higher. Let's go take, but again, topping pattern that is in play out there. If we take a look at the Shanghai, what has the Shanghai done overnight? Well, the Shanghai also has a TD9 count top out here. That high has not been taken out. Not until that high gets taken out will price give us a bullish message out here, which is moving up to the 3154 area. But price still is traded above Stevie's green line. So it's between this neutral. It's really more neutral between the bearish, the top of that TD9 count. That was from the day of June 10th. So that's your resistance level out here. And support is at 3072. If we go over and take a look at the European markets, just by taking a look at the FTSE. So what is the FTSE and the DAX doing? Well, let's go take a look at the DAX first, because we were looking at, Stevie was comparing the DAX on a 5-minute time frame for you versus the NQ. Here, if we take a look at the DAX, we can see a beautiful Gartley sell pattern. I learned this pattern from LP out here. Beautiful pattern. Now, the difference between what I do and what Larry does is I wait for a confirming signal at either the 1-to-1, 1-to-1.272, 1-to-1.618 area, and that's what transpired. And so this is where I say we have a confirmed Gartley sell pattern in the DAX because of the bearish engulfing candle that formed on June the 9th. Now, in the case of the DAX, we can see, unlike the Shanghai and the Shanghai and the Hang Seng out here, price has been testing and rejecting Stevie's green line. So the key level in the DAX today is 12,399. As long as price remains below that, it's signaling to us that its counter trend rally over the past couple of days is over. It's kaput. And that price will now target its breakout area in the 10,677 level. Different message if the DAX closes above 12,400. We're going with the message right now. We're just turning the pages like reading a book out here, one page at a time. That's why we use new information to draw new conclusions, should the new information make us draw a new conclusion. But in the DAX, we don't have that just yet. In the case of the FTSE, it's got a TD9 count top. Folks, if you're not familiar with that pattern, go subscribe to Mastering Probability. You can do it for less than 30 days, and you'll learn some amazing tools out there that I guarantee you will assist you in your trading and investing out here. So the TD9 count pattern, we've got that as a topping signal. Now, in the case of the FTSE, you really want to keep your eyes on it for messages, because when you get a topping signal, all that it really gives sellers the opportunity to do is push price down to support. Well, in the case of the FTSE, that's what it did. Its support level, its breakout area was 59.9328. This is why you want to learn the TD9 count pattern. This is not a swing point. You would not have picked this out as a breakout level. I guarantee you would. And anyone who tells me that they would have picked out 59.9328, please send me an email and tell me how you would have chosen that candle as your breakout level. It's only that TD9 count pattern that really gives us this clear breakout and breakdown areas out here. You want to use this. Now, so price pushes down to support. It holds. Shoot. Not does it only hold. You form a bullish hammer candle. But just a counter trend rally up to Stevie's green line. The key level here inside the FTSE, 62.5580 to the upside. To the downside, 59.93. We get back for this break. Let's go take a request from S&P, who is short the Russell and short the Dow. We'll be right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Good morning, folks. This is Steve Rhodes filling in for Larry Pesavento at 9:18 in the morning. In case you're listening to the normal Trader's Edge 1 o'clock show. Hey, tomorrow morning I'm also going to do a 9 to 10. So join me live or send me your questions ahead of time, and we'll make sure that we go through all those charts out here. So currently we've got the Dow futures trading down about 210 points. Nasdaq off 21. Russell is down 13, and the S&P is off 20. So for S&P, who's short, the Russell as well as the Dow, he's got some put positions on that are going to close out tomorrow, and he's looking for some signals as to when to exit the trade out here. So let's take a look at, so when price is pushing back, and the numbers are, fairly large because the average true range has been pretty large over the last 10 days. For example, in the case of the Dow equity future contract, just so you get a feel for it, the average true range movement over the last 10 days is 747 points. Yeah, that's a big jumbo jet out there. It's only down 208 right now. So it's really just a smidgen. The NASDAQ average true range last 10 days, 235 points. We're off 19. The S&P 78 points is the average true range for the last 10 days. We're down 19 points right now. So really no big deal out here, right? But so we can't get confused in the numbers. But instead what we need to do is always understand the battleground. Where is support and resistance? That's a real beauty of that TD9 count pattern out here. It just makes it very simple, very easy. So let's put up, so Zephin's question is, hey, should I exit now? Knowing that he's got to close out this position by tomorrow. Let's take a look at, and we have to consider what's going on in all the future contract markets out here. So when we pull open this chart here, this is our 4 equity future contract, even though I know we want to focus on the Dow and the Russell, and we'll get there. But what sticks out here on this chart, the most compelling piece of information that we need to draw upon is the S&P 500. So the move lower in the ES Mini, that's going to be your left-hand panel chart out here. What I want you to understand is that a brand new profile formed a couple days ago. Now, we're always trying to seek out is support and resistance. If something can bust through support, that tells us, okay, price is headed down lower. If price is moving back to support, well, what kind of support? Is it strong support? Is there some way for us to be able to identify a strong level of support? Well, with the market profiles, we can. How do we do that? Well, there's really three levels. Let me just expand out this chart here. And there's really three levels, typically three levels that those market profiles are going to provide us. A top, which is where sellers are. A bottom, which is where buyers are. A center, which is where both buyers and sellers are. So think about this logically. If the center line is closer to the bottom, because there's both buyers and sellers, and the bottom is just buyers, there's more buyers in that congestion zone between the bottom and the center of that profile. So between 3042 and 3072, even though it's a 30-point range out here, that is strong support. Strong support. So Zephin, intraday, intra-morning out here, we've seen price in the ES Mini push down to that first level of strong support, which is 3072. I don't know if it's going to be busted through or not. I just know that it's strong support. And so this would be, the ES Mini would be the one giving you the signal that, okay, might be a good idea. Might be a good idea to go ahead and close it out at the open. I see you sent me a second message out here, so I've got them both. So we can see that. Now, let's go further into the shorter-term time frame charts out here. What are their signals right now? Well, if we look at the so we know we've established on the ES Mini a level, a support area that has been tested and rejected. If we take a look at the ES Mini, just look at the 30-minute time frame, yeah, we'll see a descending trend line. We'll see three TD9 tops out here, each of which worked and moved price lower. But that price lower is the breakout level. Those are the red horizontal line on my horizontal lines on my screen. So in the case of the ES Mini right now, it's testing the 3081.50 level. It's done it for 4 bars in a row, so for 2 hours. So guess what? This support level is held. That supports your conclusion. Yeah, maybe now is a good time to go ahead and close out that position out here. Not that price can't hold lower, but we do know a key level of support is held on the 30-minute time frame. Now let's go take a look at what's going on inside the strong indice out here, the NQ, which can lift the markets higher. So as we look at the NQ and its profile, by the way, its profile, that's panel 2, is a bearish structured profile. So strong resistance between the center and the top, 99.46 and 10.140. If we take a look at as prices pushed lower this morning, what was it doing? Shoot, at this stage of the game, price hasn't been able to even get down to test its most recent breakout level of support, 98.8725 out here. And if price can clear Stevie's green line, which is where prices trade, well, 99.72 would be the number out here. That's telling you should at least see an expected move up to 10.009 out here. So the NQ, pretty strong. With regard to its move lower, hasn't even gotten back to support. Now, in the case of the Dow, which is important to you because this is the specific instrument you're trading, price pushed back to the level of support of 25,688 on the 30-minute time frame. Tested, basically rejected, didn't get right down to it, but we can see that it's held. Now, look, price is below Stevie's red line out here in the 30-minute time frame. So, Zephin, to the extent that you can follow the oscillator on change line out here, you would close out the position, or suggest maybe closing out the position. If price closed above it, 25,868, but the bottom of its 30-minute profile is just above that, so you'd really use the level of 25,904. Now, on any bounce inside the Dow, should find some resistance, or could find resistance at a little descending trend line on that 30-minute time frame. It's only a 30-minute time frame that we're looking at right now. If we go take a look at the 30-minute for the Russell 2000, has it broken through any level of support out here? And the answer is, well, I don't have another level of support for the Russell 2000. It's got a TD9 count bottom from about 11 o'clock last night, or 9:30. When was the actual? I can tell you when that came in. No reason to guess out here. It was at 2300 hours, so yeah, about 11 o'clock last night. So I don't have a clear message on the 30-minute time frame here, Zephin, for the Russell. So let's go up to the 60-minute. Let's keep going up different time frames to see if we can get a feel for what the signal might be in the Russell. And on the 60-minute time frame, really don't have anything other than the low from late last night, which formed a hammer candle if you close below that. So this is not suggesting here that you close out the trade inside the Russell just yet, but you'd have to monitor those other areas of resistance, because if they fail, well, then that would be the signal. You've got a TD9 count as well on the 2-hour time frame. This is actually suggesting to me that it wants lower price. Lower price could be 1337. So I'd adjust your stop. I'd let you, put in to the extent that you can, a one cancels another trade. Let the market tell you. Figure out how much you're willing to give back out here inside the Russell trade. Let the market actually take you out. What would those levels be? inside the Russell. I'm going to go back to the 2-hour time frame chart because that was giving us the best signal. So why was it giving Stevie the best signal? That's a great question. And I didn't answer that, even though you probably asked that question out here. The reason why it just gave us a great signal is if you follow Stevie's green and red line out here, it's the oscillator on change line. Is really what the real name is. When it changes color, which it just did during the last 2-hour bar, it tells us that the price oscillator, which is the difference between the 19 and the 39-day exponential moving average for whatever time period, so in this case here, the 120-minute time period, tells us that it's below zero. But when it changes color, we look for a test. And if that's a test and rejection, in this case here, a red oscillator and change line, we have a falling price oscillator below zero. And we have that test, and we got price below the bottom of that support, and that's what opens up the potential for 1337. So I would say I'd stop out of the trade on a Russell 2000 close above somewhere between 1425 and 1430 out there, Zephin. I hope that helps you out. But if you close out the trades, you've made money, and that's a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes filling in for Larry Pesavento. This morning is 9:30. If you are listening in at the normal time, 1:30 in the afternoon, this is being recorded. I'll also tomorrow fill in for Larry from 9 to 10. That'll be replayed. We're going to make the show obviously as pertinent as we can with regard to today's activity. So we're off to the races. Markets are open. The gates are open. You've got the Dow down 206, S&Ps off 17, NASDAQ off 8, Russell down 14, semis are down 4. Spot volatility index is above its 50-day exponential moving average. It's trading out at 34.95. When the VIX, spot VIX index trades above its 50-day exponential moving average, the message is generally bearish. And that's what this chart here shows, folks. The very bottom panel is the spot volatility index, the red line. This is the 50-day exponential moving average. We're just looking at closes. The rectangular or square boxes, yellow or green, represent those time periods where the spot volatility index is above or below the 50-day exponential moving average. So you want to keep your eye on that. We've got a request to go take a look at Lam Research for one of our dinners out here. LRCX is the ticker symbol. Opening this morning, trading out at 315, climbing higher out here, very likely targeting, folks. If you take a look at these charts out here, so again, just looking at 3 time frames, always important to understand what's going on, certainly daily, weekly, monthly out here. And with regard to the market profiles, again, levels of support or resistance out here. If we take a look at the daily, so think of these market profiles as traffic areas. Where's their resistance? That would be where sellers are, the top of those boxes. Once you clear resistance, for those of you listening on the radio, maybe listening on your phone, whatever it might be, where there's traffic patterns. Once you get past that, you can clear it and move to the next area. Well, in the case of Lam Research, for its daily time frame, it is above the top of its daily profile, so it's cleared that traffic. We can also look to the very right and see the monthly time frame. And the top of that profile, of course, the month is not ended. It's only June the 18th out here. But 311.73 is a resistance area. So S&P, you're trading into one resistance area at 311.73. Prices above it, obviously. That's a beautiful thing. But know that there's still sellers out there. The month hasn't come to an end. But you're looking for another price target. Where is it that price could extend to? Hey, as long as we're above the top of the monthly, now we come back into the dead center area, the weekly. It's a bearish structured profile, but price is above the center of that area at 279, and this suggests to you that your price target is 328.03. So that's what the TAS market profile charts show us. Now, let's go take a look at Stevie's white background charts. These are my Ninja Trader charts. They've got some of my proprietary tools out here. They help us to identify tops and bottoms. Is there a top or bottom signal that's in play out here? We especially want to know that, knowing that we're trading into resistance on a monthly, into a resistance zone, a bearish structured profile on the weekly. Now, this is the daily time frame. One of those topping signals would be wave number 7, or that would be letter G. We can see that we have one present at yesterday's high. That's just going to carry over today since we made a higher high S&P. So you've got the potential of wave number 7 out here. The daily chart says, short of that topping signal, I don't have another. So short of that topping signal, this is giving you a price projection coming up to the TD9 breakdown level. And that's at a price point of 335.41. So 335.41 becomes another price target for you to be watching for. If we look at the monthly time frame chart, we already established 328.03 as a price target. So maybe that is where things could come to an end on a weekly basis. Do I have any kind of topping signal? I don't. It was the high was topped with a TD9 count pattern out here. So you can see that back in February. That was on the weekly time frame. For the monthly, if we take a look at Stevie's other tools, is there anything else out here? Nothing other than that Rhodes Momentum Indicator top from back in February out here with that bearish engulfing and key reversal candle session. So how are we going to summarize this for S&P? Right now, price looks like it wants to continue to move higher. You would consider closing out the trade if price closed below 300. 300, we'll call it 300 right now. It's 300.83 or so on my chart. That is Stevie's green line. As long as price remains above that, things still remain bullish out here. But you do have that 7th wave signal, and that is letter G on my screen out there. So maybe just tighten up the stop on that trade. But at this stage here, we're going to go with the next price target at the 328 level. I hope that helps you out, and thanks for writing in. We do have a couple of requests that have come in by email. John in Sarasota wants to take a look at ticker symbol W. Why? Why does he want to do that? I don't know. But the question is, stay in or stay out. That is Joy Inc. Oh, that's bringing a lot of joy to us. So let me come over here. Let me try reloading something. Reload all historical data. There we go. Okay. So as we take a look at YY, Joy Inc., out here, same setup. So John's question, though, specifically is stay in or out. Well, let's have the charts ask that for him. Here we know that YY is traded above the top of its daily, above the top of its weekly, and above the top of its monthly. So from a resistance standpoint, we don't see any TAS market profile resistance, and this says, hey, stay in on this trade out here. We can see an A to B equals CD pattern. Well, I can see it. I'll draw it in here for you on the daily time. Well, I'll draw it in on the daily time frame. It's in essence going to be the same as the weekly. So your A point down here, that's the low from March 19th. Your B point. So the nice thing about the A to B equals CD pattern brought to us by H.M. Gartley, of course, really brought to you and I. We didn't know H.M., but we do know LP, Larry Pesavento. And so that comes from H.M.'s book on page 222, the Gartley sell pattern, as we like to refer to it. So B point out here, April the 20th, and the C point is the low from May 14th, about a 58% retracement. So here on the daily time frame, with regard to a YY, this did give us a bearish reversal signal out here at the 1.272. This was your Three River Evening Star pattern. That was from the candles of June 5th, June 8th, and then June the 9th. But here's what we know. So it gave us the topping pattern. But what else do we know? We know that price never broke through support, John. That was the bottom of its profile, 68.38. Remember, you get a topping signal. Doesn't mean the end of the world. Doesn't mean it's over. It just tells us we got a topping signal. Price is going to try to move lower and bust out support. If you can't bust out support, you try to bust them to the upside. That is exactly what YY did out here as it closed above the top of its bear structured profile on June the 15th. So it was a very short-lived sell signal. Sometimes that happens. In this case here, the 1 to 2 A to B equals CD pattern takes you up to 96.06. Not until you see a bearish reversal candle would you consider closing out the trade. You're saying stay in, stay out. But, of course, it depends on where you're in on this trade out here and whether you're willing to see if support can be busted. Now, are there any other levels of support inside of this instrument? Well, I don't know. Let's go look at Stevie's white background chart again with my other proprietary tools out here. As we open this up and take a look at it, do we see any other kind of topping signal? We do not. It is in wave number 6. That's letter F. It's either wave number 6 or wave number 3. So wave number 7 we'd be looking for. It's going to be bar number 4 of a TD9 count. So no topping signals here, John. So I have to say the charts are telling you stay in. The weekly chart, big, wide-ranging bar that we have out here. Any kind of a topping signal? No, nothing. Where's its next target level? Its breakdown area of 114.20 out there. Again, continue to pay attention to that daily chart for any kind of topping signal. On the monthly chart, we take a look at YY. We can see that price pulled back to its breakout level. That's the 42.90 area. Now trading above the top of that profile. This is suggesting, John, a move over the long haul up to 125.84. Steve Rhodes filling in for Larry Pesavento, unless you're listening to the 1 o'clock show. Then I'm just filling in for myself, but it's a recorded voice. Steve Rhodes with TFNN. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Welcome back, folks. Dow down 164. S&P is 9. This is not Larry Pesavento's voice. This is Steve Rhodes filling in for Larry. Of course, if you're listening at the normal programming hour between 1 and 2, this is recorded. I'll be doing this show again tomorrow, so please join us live at 9 o'clock and send me your questions. Earlier in the show, we were taking a look at, for one of our listeners, Zeppin, trades inside of the Russell 2000. So now that the market's open, the cash market is opened here, and we've seen the Russell find a bit of footing this morning. What I would be looking at is 2 candle closes on a 30-minute basis above 1428 Zeppin. That's when I would then go ahead and close out the Russell 2000 short trade that you've got. If price does close above that, a pretty good signal that it wants to continue to move higher. Not until then would it give us that signal. Now, one of the reasons that we have given that figure out, that was its breakdown level on the 30-minute time frame. On the other 30, I'd also pay attention. I know Larry does this as well. He pays attention to the opening range. Now, I do something slightly different than what Larry does. I take a look at the opening ranges for the primary markets that open up. So on black here, the black lines on this chart, 30-minute time frame chart, shows you the opening range for the U.S. market. The red lines are the opening range for the for the Asian market, and the blue lines are for the European market out here. And these opening ranges can really act as support or resistance. So right now in the Russell 2000, support is 1339.80. That's the bottom of the Asian opening range out there. And 1426.90 is your resistance level. That's the top of the European range out here. Price is slowly approaching that. So why didn't I use 1426.90 when I gave it to Zeppin? Really because the signal to me is clearer when taking a look at this 30-minute time frame out here and taking a look at the breakdown level. That was established by our TD9. See how price broke above that at 5 o'clock this morning, but it didn't hold that level. We didn't have 2 candle closes above that area, and that's why I said, hey, watch 1428. It's 1427.90 to be exact. 2 candle closes would be would be the signal that price would be ready to move higher. In other words, that the breakout is not a false breakout to the upside out there. So I just wanted to go ahead and go through that. We've got What other, those of you maybe you're not familiar with me or the newsletter. There's lots of reasons to sign up for the newsletter. Tommy earlier had mentioned all of the education, but how about just traders and the information? Let's say I know Larry and his clients, they like to trade futures out here. So what else does Stevie provide to subscribers on a daily basis with regard to what's going on in the futures market or the commodity marketplaces out here? Well, take a look at this chart. This is a chart that helps you to identify support and resistance, or whether something may have bottomed or is bottoming out here with regard to signals. Remember, we take a look at the TD9 count pattern out here. So you'll see daily TD9s on this chart that help to signal. You're looking for 8s, 9s, or little stars that are on here. I don't have anything right now. You get the daily Chapman wave moves out here. So you're looking for letters G, wave number 7. Now, some of you may be looking just simply for that fourth wave, letter D, or something beyond that. So you've got those signals both to the upside as well as to the downside. You've got your support and resistance levels. That Stevie red or green line, also referred to as the oscillator unchanged line. So OUL, when you take a look at this panel on my chart, tells you exactly where resistance is at. It tells you exactly where your TAS market profile support is for each instrument. So if you take a look at the commodities, you've also got what is its current daily outlook or message. Is this bullish? Is it bearish? And I have different levels of bullish or bearishness out here. You can see in this case here, Kansas City wheat is suggesting that, or lean hogs, as well as Kansas City wheat are suggesting, as well as wheat futures also suggesting that they may have found a bottom. So that's what I use this for, and subscribers, to help us identify tops or bottoms. You've got a topping pattern signal inside of silver. So this is one thing. Now they get this for this larger time frame out here. And if we get a chance, we'll go take a look at wheat. I don't know if we will. What else do they get out here? Well, you've got the same type of data for your intraday signals. So here, when we take a look at here, you've got the same tools, same pattern, same instruments out here, even currencies as well. But now you've got it for the short-term time frames. You've got it for the 30-minute. You've got it for the 120-minute. You've got it for the 5-hour time frames out here to really assist you. Here you can see some on a 30-minute basis. You can see some TD9 count bottoms out here. There's our -8s out here, and when they're highlighted, they're telling you that they're active. Active meaning that the either bars 8, 9, or the bar following 9 are the low of that pattern. So those are signals to be paying attention to. We could also see palladium on a 30-minute basis as wave number 7. Natural gas for its August contract on a 30-minute basis has wave number 7. So take natural gas on a 30-minute basis as both wave number 7, letter G, of the Chapman wave, and the TD9 count, bar number 8 out there. So you've got that information to assist you, as well as all the support and resistance levels as of the time that those were posted. If that's information that will help you, something to consider out there, at least a test drive. We've got another request out here. I believe this one is from Hector and the fuel injectors out here. And Hector wants, his question is, what's my thoughts? What are the chart's thoughts really on gold if it can close above 1761? So we take a look at Goldilocks. I like to look at gold a couple different ways. You should look at gold a number of different ways too. What do you mean a number of different ways, Steve? Well, it's really important. It's substantially important. It is significantly important. I guess you're kind of getting the feel that Stevie thinks it's important. Now, what would be really important for me is finding the actual chart out here. If I can't do that, then how important is it? Well, here we go. So now we take a look at gold. It's important to take a look and understand what are traders in gold, in their currency, doing. If you're just taking a look at how gold is trading in terms of dollars and just paying attention to that, you're going to get the schnot kicked out of you if that's a possibility out here. You don't want to do that. So in the case of gold, we can see it's moving slightly lower in terms of U.S. dollars, slightly lower in terms of euros, lower in terms of yen, higher in terms of pounds. You kind of get the picture out here. You've got a mixed bag with regard to its message. So that's number one. Number two out here, gold is uninteresting to me, unless you are a short-term trader. It should be uninteresting to you as well. Why should it be uninteresting, Steve-O? Well, because of the sideways consolidation. Look, this also has a TD9 count top, bar number 8 out here. But you look at this consolidation. Price would have to close above the consolidation. Maybe that is the 1761 area. We'll go with that. It really looks like it's more around 1770 something out here. It's about 1777. I like that. The forearm banded out there, 7777 out here. So gold doesn't get interesting to you or me. And now you get the wide range. So you buy at the bottom of the consolidation, you sell at the top of the consolidation out here. I just don't see a whole lot in gold. Now we can go take a look at a short-term time frame chart. Let's do that for Hector and the fuel injectors out here. Any signals coming from a short-term time frame? Well, short-term being, let's say, a 30-minute time frame. What do we have? We got nothing, not a zip, zilch. You know, you've got support. At least you know where support is. 1721.20 on a 30-minute basis, and 1736.40. That's the top of its 30-minute profile out there. So that's support and resistance here. Again, really uninteresting for at least Stevie when we take a look at gold. If I expand up to a 60-minute time frame out here. Price pull back in here. Your support areas between 1719 and 1721, and resistance out here about 1739. Hey, let's go out to Michigan and speak with. Oh shoot, we're going to a hard break. I don't know if there's a 2-minute segment here or not, but hopefully we'll be back live and we'll go take a look at the Dow with Gary in Michigan. Steve Rhodes with TFNN filling in for Larry Pesavento. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's immediately get out to Gary. I think we've got about a minute and a half or so. Gary, thanks for holding. Thanks for calling. How are you today? I know you want to take a look at the Dow. Let me know how I can help you.
Sure, Steve. I'm a subscriber, and I love your service. And I want to make a determination by the end of the day as it goes on. If there's some numbers on that dog I've got, make sure it isn't a dog, as far as a play, and possibly holding it overnight to expiration tomorrow on the Dow.
Sure. So the key number for the Dow equity future contract is going to be 26,280 right now. If price remains below that, it's an indication that it wants to head lower. The problem is trying to figure this out in a summertime, holiday. That we're starting to get towards that July 4th feeling out here. Summertime, what might happen on a Friday. For the Dow specifically, the number, give me a second here and I'll pull that up, because I know you don't have necessarily access to the futures contract, but that would be the number I would be looking for inside the Dow, the cash indice. That is going to be 26,385 or thereabouts. And as long as price closes below that, it's suggesting to stay with that trade. But because it's an option that you've got out here, it really is more about what's going on in the short-term time frame charts out here. And what you really want to see is you want to see key level of support fail. And on that short-term time frame chart, that level is going to be 25,688. Where would you, on a short-term time frame, consider stopping out? If you could see this little descending trend line, it's around the 26,200 area. But those are the numbers that I can provide you with. I don't see anything else on my system to assist you there. It's kind of like with Stefan. Here's my take on it, Gary. The ES Mini was not able to bust through support, so maybe you want to consider closing that trade out or rolling it over or something like that. Okay?
Okay, great. Thanks. You're awesome. And I do have the futures access now, so thanks for everything. I'll watch both those numbers.
Have a great day. Hey, folks, thanks so much for being here. Don't forget, I'm going to do the same show tomorrow, 9 to 10, and stay tuned for a couple of great hours. Take care, folks.